There's a trade that looks perfect. Everything lines up. The stock is moving strong. The volume is there. It's breaking out clean. And in that moment, your brain tells you, this is it. This is exactly what I've been waiting for. So you get in, and almost immediately, it fails. It pulls back. It stalls out. Or worse, it reverses completely. And now you're sitting there wondering, how did that not work? Because on paper, it looked like an A-plus setup. This is one of the most frustrating experiences in trading. Not the obvious bad trades, not the random entries, but the ones that look right, the ones that feel right, the ones you're convinced are high quality, and yet they still fail. And the truth is, most traders never fully understand why this keeps happening. They start questioning everything. Maybe my strategy doesn't work. Maybe I need better indicators. Maybe I need a different scanner. But that's not the problem. The problem is this. You are confusing movement with confirmation. Just because a stock is moving does not mean it is ready. Just because it is breaking out does not mean it is strong. Just because it looks good does not mean it actually is. And this is where most traders get trapped, because they are reacting to what the chart looks like in the moment, instead of waiting for the setup to prove itself. Let me show you what this actually looks like. You see a stock that's already up big on the day. It starts pushing again. Strong green candles. Volume coming in. It is approaching a key level. And then it breaks. Clean. Strong. Aggressive. And right there, you feel it. That urge to get in before it runs away from you. So you click buy. But what you didn't recognize is what happened right before that breakout. There was no base, no real consolidation, no area where buyers had proven they were willing to defend price. It just went straight up. And when something goes straight up, it usually comes straight back down. Because there's no structure underneath it, no support, no reason for it to hold. So what feels like strength is actually instability, and you bought right into it. Now let's go a level deeper, because this is where most traders miss it completely. When a stock makes a strong move, there are usually two types of participants: early buyers and late buyers. The early buyers get in during consolidation. They get in when things are quiet. They get in before the obvious move. The late buyers are the ones chasing the breakout. And guess what happens next? The early buyers start taking profits into the strength that the late buyers are creating. So when you're buying that clean breakout, you're often buying from someone who is selling into you. And once that selling pressure hits, the move stalls. And then it pulls back. And now you're stuck. This is why so many perfect breakouts fail. Not because breakouts don't work, but because you're entering them at the wrong time. Now let's look at the pullback scenario again. Because this is where it gets even more deceptive. You wait this time. You let the stock push. You let it pull back. And now you're watching closely. It dips, it slows down, it starts to hold, and then it begins to curl back up. And everything looks clean. But here's the question most traders never ask. What is the quality of this pullback? Is it controlled? Or is it weak? A strong pullback usually looks like this. It comes down on lighter volume. It respects a key level like VWAP or prior breakout area. It forms higher lows. It shows buyers stepping in before breaking back up. A weak pullback looks different. It drops quickly. Volume increases on the way down. It struggles to hold levels. It barely bounces. And when it does bounce, it doesn't have real strength behind it. It just looks like it might. If you don't recognize that difference, you'll treat both the same. And that's where you get trapped. Because you'll enter a weak setup, thinking it's a strong one. And when it fails, you won't understand why. This is why "it looked good" is not a valid reason to enter a trade. Because your eyes can be fooled, your emotions can be fooled, but price behavior doesn't lie. And this is the shift you need to make. Stop asking, "Does this look good?" And start asking, "What is this actually doing? Is it holding where it should? Is volume behaving the right way? Are buyers actually stepping in? Or am I just hoping they will?" Because hope is not confirmation. And if you trade based on hope, you will always be early. Now let's talk about timing, because this is where everything comes together. Most traders are not wrong about direction. They're wrong about timing. They see the right idea, but they execute it too soon. And in trading, being early is the same as being wrong. Because if your timing is off, your risk is worse, your entry is worse, and your confidence gets destroyed. And once your confidence is gone, you start making even worse decisions. You hesitate on good setups. You chase bad ones. You start forcing trades just to make back what you lost. And now one small mistake turns into a bad day. This is how the cycle starts. And it all comes from one thing: not waiting long enough. So how do you fix this? First, you need to slow everything down. When a stock starts moving, do nothing. That's your job. Not to react, not to chase, just to observe. Let the move happen. Let the pullback happen. Let the structure form. Because the best trades usually come after the excitement, not during it. Second, you need to define confirmation for yourself clearly, specifically. What has to happen before you enter? Does it need a pullback and hold? Does it need a higher low? Does it need volume to come in on the break? Does it need to stay above VWAP? Write it down. Because if it's not defined, you will always find a way to justify getting in early. Third, you need to get comfortable missing trades. This is non-negotiable. There will be times where a stock just goes without giving you a clean entry, and your brain will tell you, you missed it. You should have taken it. But that's not the goal. The goal is not to catch every move. The goal is to take high-quality trades consistently, and missing a move is always better than forcing a bad one. Fourth, you need to start reviewing your trades differently. Don't just look at winners and losers. Look at the trades that looked perfect, but failed. Study them. What was missing? Was there real confirmation? Or did it just look clean? Was there structure? Or just momentum? Because once you start seeing that pattern, everything changes. And finally, understand this clearly. A setup is not defined by how it looks in the moment. It's defined by how it behaves over time. And until you learn to wait for that behavior, you will keep getting trapped in trades that feel right, but aren't. So the next time you see a trade that looks perfect, pause. Don't rush in. Don't assume. Don't react. Let it prove itself first, because that one decision, to wait for confirmation instead of acting on appearance, is what separates a struggling trader from a consistent one. If this hit home for you, make sure to like the video and comment below. What's one trade you took recently that looked perfect but failed? And if you want more content on trading psychology, discipline, and actually improving as a trader, make sure to subscribe. Because this is the stuff that really makes the difference.